Have you ever sold options only to get frustrated that the trade didn't go your way? Or maybe you want to earn some extra income using options, but need something a little bit more advanced than selling covered calls? Well, I've got a strategy that covers both. The Iron Condor. In the 20 years that I've been trading stocks and options, I've come to love the Iron Condor because it gives you more chances to succeed. And it's one that you can easily replicate and earn you money every single week. The Iron Condor is a neutral options strategy that profits on the underlying stock's low volatility and limited price movement. It's a great way to generate some profit without exposing yourself to too much risk. So stick around, and I'm going to be talking about this option strategy, which might seem a little complicated if you're new to options trading, but as usual, I'm going to break everything down into a way that is easier to understand. And if anyone ever asks you how you earn weekly income trading stocks and options, just tell them that you subscribe to Rick's channel on YouTube. Okay, so with that out of the way, let's get right into Iron Condors. So what is an Iron Condor? The Iron Condor is a directionally neutral strategy with a well-defined profit and risk profile. By the way, it's also known as a short Iron Condor, and that's because it generates a credit. A long Iron Condor, well, also known as the reverse Iron Condor, well, that would require a debit. It would require you to pay money, and that's a whole other strategy for another video. Now, the Iron Condor strategy gets its name from the shape of its profit and loss graph, which looks just like a flying condor. Now, let's see how an Iron Condor works. The strategy combines two vertical spreads, the bear call and the bull put. So that's actually four options, one long and one short call option, and another set of long and short put options with different strike prices, but they all have the same expiration date. In order for this strategy to work best, all four options have to expire worthless. So the Iron Condor, as I said earlier, is a risk-defined strategy. It means the maximum profit you'll get is any credit that you receive for selling the position. On the other hand, the maximum loss is also defined as well. Traders selling the Iron Condor believe that the underlying stock will not move significantly between the short option strike prices by expiration. And applying this strategy to create some weekly income can also give you an edge thanks to its shorter time period. And in a neutral market, that gives you a good chance of earning the maximum profit possible on these trades. Now, if you're new to options trading, let me try making this a little easier with an analogy. An Iron Condor is kind of like betting on throwing a bowling ball, with the ball representing the asset or the stock's price. Now, ideally, you want the ball to hit somewhere around the middle and topple at least one of the pins. And this represents the area between your short options. And if the asset price ends somewhere in between by expiration, then you get to keep the profits or the maximum profit. So it's okay for the ball to stray a little bit to the left or the right, but as long as it hits one of the pins, you're fine. And this represents the area between the spreads where profits drop and the trade transitions to a loss. Now, if the ball rolls into the gutter without hitting the pins, or worse, it jumps over into the next lane, well, you lose. The gutter represents the long option strike prices, and if the strike price reaches or goes above or beyond those values, then you'll reach the maximum loss condition for the Iron Condor trade. All right, so let's step it up a little and use a real-life stock to see how an Iron Condor trade can play out. To do that, we're going to go ahead and visit my favorite option scanner. It's called Option Samurai. And one of the best things I like about Option Samurai is that it's user and, well, newbie friendly. But it also has the advanced functionalities that option trading experts can use to customize or fine-tune their searches. I'm going to give examples for both of those right now. All right, so I've just logged in, and now I'm going to hit Compose New Scan. And then, as you can see here, I'm going to click where it says Covered Call, which, by the way, is another strategy I made a video on, and you can check that out right here. Okay, so this is where you can choose all of the option strategies that Option Samurai has. And as you can see, there's lots of them. Now, we'll talk about these in other videos, but for now, we're going to focus on the Iron Condor. All right, so the scanner is now going to automatically present me a list of options that we can apply to the strategy. But wait, before you start sifting through the list, let's do some fine-tuning. Remember, the Iron Condor strategy works if the underlying stock's price stays between the short strikes at expiration. So to give you a better chance of making money out of this trade, let's go ahead and head down to the filters right at the bottom here and look for the probability of max profit as well as the probability of max loss. These are going to be your two most important values. All right, so we're going to set the probability of max profit to 70%, and then we're going to set the probability of max loss to 30%. What we want to do is limit our chances of any loss. As long as you've got these values defined, the scanner is going to give you some decent chances to make a profit. But you can always change the values to suit your risk appetite as well as preferences. Once you set up these values, don't forget to hit the Run Scan button. And there we have it. Here's a list of trades with more than a 70% chance of hitting the maximum profit. So let's take a look at what we have here on the list. All right, here as you can see at the top, we've got Netflix, and the scanner says it offers a 71.99% chance of max profit and only a 19.68% max loss, or chance of max loss. I think that's not bad. Now, the actual amount of max profit doesn't look too bad either. Let's go with this trade. By the way, the scanner doesn't just filter options based on your strategy and preferences, but it also breaks down every leg of the trading strategy so that even new options traders can use it. All right, so when you click on Netflix, the details page appears at the bottom of the screen. And that's where we're going to see the trade breakdown, possible profit and loss scenarios, as well as a bunch of other helpful information for the strategy. And here's your trade or options legs. Let's visualize all of this in a graph so it's easier, starting with the axis. The x-axis is the asset price, and the y-axis is the profit or loss. Now, Netflix's last trade at the time of the recording was $355.68. So let's put that right about here. Now, the scanner tells us to write a put option with a $315 strike for between $6.40 and $9.15, and a call option with a $445 strike between $142 and $181. So let's plot those strike prices here. Then we need to buy a put option with a $305 strike between $450 and $475, and another call option with a $455 strike for between 98 cents and $1.14. And remember, all legs have the same expiration date, which in this case is November 24th, which is a little bit over a month from the time I made this video. By the way, if you'd like to use this option scanner, I went ahead and I left a link in the description below for you. And if you use it, you'll get a free trial as well as a discount if you continue to use the product. Okay, so that's it for the initial setup. Now that we have our values, let's head over to the profit and loss scenarios. Now, Option Samurai gives you the median values when showing the potential profits and losses. But we won't be using these on the channel because I want to show you the actual maximum profits and loss for this trade. So there's going to be some differences in the resulting values. So we're going to be using some examples. And it doesn't really matter how we compute the values and all the conditions, well, they're all the same. So with that out of the way, let's look at how this Iron Condor can go. The maximum profit for an Iron Condor is the net premium received, that's the credit, when setting up the trade. And this is the formula that you can use to figure it out yourself. Now, the option scanner presented us with a range of values for premiums. So just for ease, we're going to use the maximum values, just, to simplify things, and give us an idea of how much we can earn potentially. So by substituting the values, we now have $5.07 of maximum profit per contract times 100, so $507. Remember, the maximum profit is received when the underlying price, so the asset price, stays within the range of the short options until expiration. So let's throw that up here on the graph. So if Netflix trades at $400 by November 24th, you get to pocket $5.07 times 100 for every Iron Condor contract you sell. Since contracts, remember, they always cover 100 shares, so that's $507 total. Now, if you had traded 4 of these Iron Condors, you'd pocket $2,028. And remember, you have a 72% chance of getting the max profit on this particular trade that we found. Now, the trade starts to break down when Netflix's price moves beyond the short strike prices. Now, Iron Condors have 2 break-even prices, one to the upside, which is the call spread, and one to the downside, which is the put spread. To calculate the break-even points on the put spread, we take the short put option strike price and subtract the maximum profit. And to calculate the break-even point on the call spread, we add the maximum profit to the short call option strike price. That means the break-even price on the put spread is $309.93 and $450.07 on the call spread. Now, the trade will incur losses once the underlying assets price moves above or beyond the break-even prices within our expiration. The maximum loss is achieved when the asset price moves beyond the long option strike prices, which are $305 and $455, and is calculated using this formula. Since our spreads are evenly distanced, the width is $10. So when we subtract the premium, it makes our maximum loss per contract of $493. And there we have it. That's the distinctive shape of the Iron Condor, or at least in a nutshell. So how do you trade the Iron Condor to earn some weekly income? Now, most options that people trade last for about a month. But as I mentioned before, you can absolutely use this strategy to earn weekly income. Let me show you how. All right, so let's go back to Option Samurai and look at the options data filter. And here we're going to see the expiration dates. To get options recommendations for weekly trades, just change the dates that suit your needs. It's honestly that easy. But remember that every time you change a filter value, you need to hit the run scan to get the new results. And one more thing. Remember that October and November, well, this is one of our earnings seasons. A lot of companies are releasing their quarterly financials, and the prices may not be as stable as we like for Iron Condors, so keep that in mind. So in this particular case, I don't expect we're going to have a lot of results popping up for the weekly search with a 70% chance of max profit, but let's take a look. And it appears I was right. And for this particular trade, we only have Chipotle. Well, that's fine. If you're okay with the results of your original search, that's no problem. But if you want to have more choices, you can always fine-tune your filters. And of course, you can always reduce the max profit down to 60% and put the max loss up to 40% if you're feeling a little bit more risky, or if you want to take a little bit more risks. I mean, there's still pretty decent odds. Plus, don't forget that the weekly expiration works in our favor. So for Option Samurai, you can see if a company has an earnings announcement coming up, if there's a little phone icon near the stock ticker, and you can hover over it to see the details like this. Now, for those of you who want more information into a company's fundamentals, or maybe even some additional technical indicators, I suggest checking out barchart.com. Barchart is an excellent portal for everything you might need to know about a company or the company's fundamentals. There's financials, analysts' recommendations, real-time options data, and even the dividend details and practically everything in between. So between this and Option Samurai's step-by-step options scanner, as well as the strategy guide, well, you have everything you need to be a successful options or even a stocks trader. All right, so how do you adjust Iron Condors? So let's say you've sold your Iron Condor and now the underlying stock price is moving way too close to your long strikes. And maybe you feel like you've got itchy fingers and you want to fix it. So you ask yourself, do you accept it or do you take the loss? What are you going to do? Well, you don't have to just accept the loss. The nice thing about the Iron Condor, and really this applies to most options trading strategies, is that you can often make adjustments to your spreads to help ensure profitability, or at least move the chances in your favor. So let's talk about the possible adjustment scenarios we have. Be aware that we're talking about hypotheticals here because, these haven't actually happened yet. So we'll use the Netflix example from before. And let's say the stock price is now up to $454 a few days before expiration. To mitigate the loss, we can adjust or roll whichever spread is being threatened. In this case, our bear call spread needs some adjusting. So what we need to do is close out the losing side of the Iron Condor. To do that, what we need to do is buy a call option with the same strike price as our short call, then sell a call with the same strike price as our long call, closing out the spread. Now, be aware that for this particular example, buying the call will probably mean additional costs for you. So, for the sake of calculations, let's say that buying back the spread costs you an extra $2. Once that spread is closed, we can then trade a new one by selling a call, say at $460, and buying a call at, say, $470. And this move is only recommended if you're confident that Netflix's stock price is not going to go above $460. In this case, let's say you manage to earn an additional 50-cent credit for this spread. So that means the new maximum profit is $3.57. Doing so will also adjust your break-even side price. So it'll now be $463.57 to the upside and $311.43 on the downside. Now, the maximum loss is calculated in the same way, and it works out to $6.43. The process and calculations are the same if the price moves downwards. Let's say Netflix goes down to $306. In this case, you're about to reach max loss on the trade. So what do? Well, you can adjust the put option spread lower to have a higher chance of the spread expiring worthless. It's exactly as you did with the call spread, adjusting it higher. Only for a put spread, you're doing it in reverse. You adjust it lower. So to wrap up, moving the losing spread can help keep the trade profitable, but it also can lower your maximum profit and can increase your maximum potential loss. So with all this in mind, you might be asking yourself, are Iron Condors profitable? Well, to ask yourself this, ask how often do Iron Condors make money? I mean, it depends. Remember, in order for you to be profitable with an Iron Condor, the stock needs to trade between the short option strike prices. Now, if you just guess and pick random strike prices, well, you could get lucky a few times, but remember, just because it worked out well once or twice doesn't mean it's going to work out well in the future. And that's why it's better to know your chances in advance before your trade. Also, don't forget that transaction costs, trading costs, margin requirements should all be considered when implementing complex option strategies like this one. So you'll want to trade with an options-friendly broker. And I use Interactive Brokers. There's a few others out there that you can use as well. So as we wrap up, if you're new to options trading, the Iron Condor strategy might be one of the best strategies out there because it's a way to play it safe as well as earn some weekly income when the stock market is relatively calm. Don't be intimidated by the complexity of this strategy. Just, feel free to go back to the beginning of this video to see exactly how it works. With a little practice, due diligence, back testing, and tools like Options Samurai and barchart.com, you can use this strategy for consistent weekly options income. Thank you so much for watching, and I will see you in another video. Bye.